Wealth is more than money. It's legacy, wisdom, and the alignment of purpose. Welcome to Crown and Keys, where we unlock the secrets to generational wealth, passive income, and financial freedom through real estate, tax strategy, and personal development. I'm your host, Cynthia Spirlin, your guide on this journey. With over 20 years in real estate investing, a Juris Doctorate, and the passion for aligning wealth with purpose, I bring you conversations with the most brilliant minds in real estate, finance, and entrepreneurship. Together, we'll uncover the strategies that turn income into impact and assets into legacy. Your wealth isn't just for you, it's for the generations that follow. So grab your keys, adjust your crown, and let's build something that lasts. Welcome back to Crown and Keys, the podcast where we unlock the secrets to generational wealth through real estate investing, personal development, and human potential. Today, we have a truly special guest, someone who has been immersed in the world of real estate her entire life. Tiffany Nyiri grew up surrounded by top professionals in real estate and mortgage lending, shaping her deep expertise in the industry. A seasoned loan officer since 1997, Tiffany has built a reputation for clear communication and a genuine commitment to her clients. As the founder of Active Lending Group, she leads a mortgage company that puts her clients first, with a strong focus on helping those 62 and older utilize reverse mortgages to secure their financial future. We have so many stories. You're going to love it. Tiffany,
we're definitely going to bust some myths.
I love it. I love it. We need to do that. Miss Buster right here today. Tiffany's passion lies in empowering her clients with the right financial tools to achieve stability and peace of mind. We love peace of mind. The less stress, the better, right? Keeps us young. No stress, more life. Let's dive into the conversation and learn from Tiffany's wealth of experience. Hello, Tiffany. Thank you so much for joining us today.
Thank you, Cynthia. I appreciate it. And I love that I got invited onto your podcast. You've already helped so many people. And I just want to add a little bit to that.
Awesome. Awesome. Well, let's dive in. Tell us, what is the strength of reverse mortgages in relationship to generational wealth?
Okay, well, let's start by, I'm actually going to read a definition of what a reverse mortgage is.
Okay.
Because some may not understand what a reverse mortgage is because they've heard stories, and it may have been bad stories, good stories. I always ask people, when they tell me their family member had a reverse, I ask, how'd it go? But let me just dive in real quick. A reverse mortgage is a loan that uses the home as collateral. Most loans do. And defers payment until a later time, which means payment is optional. Typically, when the home sells, that's when payback happens. It allows a homeowner to convert part of the equity in their home into cash without having to sell their home or pay additional monthly bills. These are for the people that want to stay in their home. This is not for someone that wants to get some money real quick and sell in a year. Okay. This loan is so that you can live your best life, utilizing what you've worked so hard for your whole life to pay off, pay down. You do not have to have your home owned free and clear to do a reverse mortgage.
Oh, really?
You do not. No, you can have a loan on the property. My one right now, we're paying off a line of credit. It's a very small line of credit, but we're paying one off so that she can, have some fun, go to the movies.
Yeah, go to the movies.
Go to the movies. Something simple as go to the movies.
Yeah, we take those kind of things for granted. But after years of paying off your mortgage and the equity growing, like in California, what do? You're just kind of locked into this equity in your home and you don't want to sell it. What do?
Well, and the idea behind it long ago was pay off your house and have that nest egg sitting there. Well, sitting there isn't doing anything for you. There's so many strategies and tools that you could be using to allow that equity to build more wealth for your family after you leave this beautiful earth, generational wealth. But you need to raise your hand and go, hey, I'd like to learn a little bit more about the strategies behind it.
Yeah.
Don't just take for granted what someone told you
Right.
in their opinion.
Right. Facts.
Is loan.
Yeah. Facts.
Because some people will tell you annuities are bad. Other people love annuities.
Mm-hmm.
Same thing. Same
Right.
thing. The strategy behind reverses is so much, so much. Do you know wealthy people use this loan? Wealthy people, not people that need it.
Yeah.
They understand the benefits of it. They understand how to use what is being offered.
Mm-hmm. Mm-hmm.
So I probably have 50-50 need-based clients and strategic clients.
Okay, so let's talk about strategy then. How
Okay.
can someone unlock wealth that they're sitting on, this wealth that's just been incubating, the home is growing, the appreciation in the neighborhood and the community is going, but how can they use that to their advantage? Because although they have been saving in their 401k and different activities over the years, now the inflation rises into the picture and it's like you didn't save anything. So now what's the strategy to overcome the shortfall with retirement and a huge equity locked in your home?
Yes. So let's start by just telling a few things about the reverse, and then I'm going to tell a really fun story.
Okay.
So there are different things you can do under the umbrella of reverse. You can pay off your first. You can get money per month called a tenure. You can get money out to do repairs on your home instead of pulling from your retirement. I'm going to say that again. Please do not pull from your retirement if you have equity in your home. That will screw up everything that your financial advisor is trying to do for you.
Okay.
So for instance, your financial advisor told you you have X amount of money and you're good till about 95 years old. Well,
Right.
if you start pulling that money out specifically in a down market, you need to now pass away at 85. Sorry, you just cut 10 years off your life because you only had your retirement as a source of income.
Mm-hmm. Mm-hmm.
And if it's in a down market and you're still pulling your 5,000 a month, you're now pulling money out on sale, not in a good way.
You're right. Right.
Okay. So we can get money per month. We can pull money out to do repairs on your home,
Mm-hmm.
roof, paint, things that are health and safety.
Yeah.
You can also do what is called a line of credit, which is my favorite.
Right.
It is not what you would go out and look for that people talk about right now. It is not a HELOC. It is not a home equity line of credit.
Mm-hmm.
It is under the umbrella of reverse.
Oh,
No payments are necessary. Although if you have a strategy, you can pay yourself back.
sure.
Okay, which is really cool. So those are the three things we're going to talk about. And here's the story. So my dad, he does not, quote, need a reverse. He is of strategic. He's doing this for strategic reasons.
Okay.
So dad has I think he's got like 8 properties. And he lives on the rent from these properties.
Okay.
Okay. Well, one of them, we needed to do some work and dad sits in my office. So he hears me talking about this. He's a real estate broker since 1969. He understands loans, but he did not understand reverse mortgages since 1969, in the real estate game.
Right. Tiffany.
So he hears me talking about all these strategies and he goes, hey, Tiff, I got to do some work on my rental, but I don't want to use my line of credit.
Right.
Because it's going to take me a little while and I don't want a payment and the interest rate's high. And,
Right.
I think I should do a reverse
Mm-hmm.
and I want that line of credit you've been talking about. And I just kind of had to go, I'm so excited because, dad knows his stuff, but he did not know reverses. So I was happy that I could educate an old timer that knows a lot of things about real estate.
Yeah.
So anyway, we got some money to fix the condo we ended up selling the condo. So he
Okay.
put all that money back in. He paid that off.
Sure.
And now his line of credit, let's say it's about $200,000. It has a growth factor, and this is going to confuse a lot of people, but that's okay. Just raise your hand and call me and I'll explain it.
Okay.
Got a growth factor. It's not earning interest. It's a growth factor
Okay.
of, let's say it's at 7% today. Well, 7% on $200,000 is nothing to sneeze at.
No.
That is good growth. That is beautiful growth. The longer you leave that money in there, the more money you have to utilize on yourself, your home,
Right.
future inheritance for your children. What if your kids don't own a house right now? What if they're renting at $3,000 a month?
Oof.
Why don't we give them future inheritance? Because when we pass away, our house goes to our children, most likely. And why wouldn't we want to do that?
Sure. Yeah.
Of course, we would call you and say, hey, this is what I'm thinking about doing. And you would go, hey, let's do some numbers. Let's see if that makes sense. Because in California, our average appreciation is 6.5%.
Right. Oof.
So if we got our kids an a property of their own, and we didn't have to make a payment on it,
Even better.
even better. But
So
we
you
could
can
make
use
a payment.
So you can use the reverse mortgage to buy another property.
Yes, and you can do that strategically. You can buy an investment property. You could buy a second home. You could buy your kids a home. You could buy, golly, what if you wanted to start a business? You could start a business if you wanted to.
Oh man, there's endless possibilities.
The money is not taxable because it's a loan.
Oh,
So
man.
you pull money out of your retirement, big money, you're getting taxed.
Now, I have a question, and I'm sure this might be a question the audience has as well. What about your FICO score and debt to income ratio? How does that factor into a reverse mortgage?
It doesn't really.
Okay.
It doesn't really. You can have not beautiful credit and still get a reverse mortgage. Okay. It is not credit based.
Okay.
However, they do look at you as a whole.
Mm-hmm.
And we have some safeguards and some guidelines put in place to protect the person giving you the money.
Yes.
Because if you do have a little bit of something going on, maybe you haven't been able to pay your taxes for a couple of years even. We have some things put in place where we can impound your taxes
Okay.
for, let's say, 10 years, and it makes the bank feel warm and cozy.
Yeah.
So you can have a 500 score and still get a reverse mortgage.
Okay. Or like, you might have had a different income as a full-time person, and now you're retired, the cost of living is not matching. And so you kind of had some dings because
Yes.
of this money just locked in and you didn't know there was any other option. So don't worry, you can still take advantage of
Dings happen. Yes, dings happen. And again, this is a make sense loan.
Okay.
This is not an automated system like a lot of the loans in the forward world. This is actually done by a human being.
Okay.
So we can write letters of explanation.
Sure. Okay.
And we can show a little bit of strength as far as our ratios. Again, you're not qualifying with a house payment, which is typically a big chunk of your income.
Right. So you can get this help to help with add a second stream of income, essentially.
Yeah, that's what we call the 10-year payment. My gal right now, poor thing, again, the poor girl, she can't go to the movies with her girlfriends. No money. So we're going to get her an extra $1,000 a month. That is going to change her life.
Sure, she can enjoy it. She can actually leave home. She's not a prisoner of her house and just stuck in those four walls till who knows when.
Now, and people might be thinking, oh, but you're going to take so much of my equity that I'm not going to have any left. No. This loan is extremely conservative as far as how much you are able to utilize.
So are there some percentages on the guidelines, like a 60-40 or no more than, how does that work?
It's an algorithm based upon age and the market conditions.
Okay.
So the older you are, the more money you're going to be able to get.
Okay. But if you're
Now,
younger, they want to give some time.
yes, yes, because let's just like life insurance, they take the algorithm out to 100 years old.
Okay.
So if you're 62, whoo, that's young. That's like being 20 again. Okay. So you got a long time to go before
Yeah,
you're 100 years
sure.
old.
Yeah,
So they're going to be even more conservative with you because you're young.
right. Yeah.
And that's okay. That's okay because, again, we're not just going to start with, hey, this is a reverse mortgage. You qualify for this, this, and this. We're going to dive in deeper and go, hey, you know what, this savings, this is what you can do. And
Well,
your side would be doing the exact same thing. So let's say they're saving $1,800 on their house payment.
hmm.
Can we do something with that $1,800?
Sure.
Invest it?
Yeah.
Can we can do all kinds of different things, or we can just live our best life because we only have so much time on this earth.
Right. Yeah. Yeah. But you want to
And
have fun, travel a little bit, see some of the things that you didn't have time when you were working 9 to 5, Right?
exactly. And or, if you want to go build a house in another country, go build a house in another country.
Yeah.
Yes, please.
Yeah. Pay for your kid to go to medical school.
Yes.
Yeah.
Yes.
So many things. So many things. You could good things you can do. Enjoy yourself, help others, buy other property.
Oh,
It's really fantastic what's possible.
mhm. And a lot of the people I talk to have a financial advisor that may not understand this loan. And that's okay. I am here to help them understand
Okay.
that it is a beautiful math equation.
Mm.
Okay. And that's how I talk to my financial advisors because they're math.
Yeah, they are the numbers people.
They are, yes. So we need to educate. I mean, even my financial advisor, he's like, Tiff, I need you to tell me more about this reverse because I only know what I'm told.
Yeah.
Well, truth be told, it's rare that someone shouts it from the rooftops that they're so happy they got a reverse mortgage.
Well, what are some of the myths about misunderstanding, misconceptions
Mm.
about the reverse mortgage?
Okay, so this is the main one. My mom's getting kicked out of her house because dad died.
Mm.
Okay, well, there's more to it. Let's rewind that and figure out why.
Okay.
Okay, dad at the time was 70, mom was 65.
Mm-hmm.
Okay, mom's younger.
Right.
They're going to take the youngest person in the home on
Mm.
the loan. Okay,
Mm-hmm.
well, a 70-year-old gets way more money than a 65-year-old.
Okay.
They kicked mom off the loan, completely off the loan.
Oh.
The loan. Well, the loan is the only thing keeping her in the home.
Mm.
Got to be on the loan. Otherwise, the loan goes away,
Yeah.
becomes due and payable when you
100%.
pass away or leave the home.
Yes.
So, mom, mourning her husband's passing, gets
Uh-huh.
this letter in the mail stating that they're foreclosing on the home because they know that dad passed away.
Yeah.
Well, she doesn't know. She's like, what? We had a reverse mortgage. I know this much, but I didn't know I wasn't on the loan. I didn't know I'd have to get out.
Mm.
Well, that guideline is extremely tight. I mean, you have to go through some hoops to get your spouse off of the loan these days.
Oh, okay. Okay.
Okay. That has been
Correct.
resolved.
Yeah.
We are at basically the new and improved modern reverse mortgage.
Okay.
It understands the loopholes. It closed the loopholes and it's better for it. It's a beautiful loan. There's counseling. You have to do counseling over the phone so
Mhm.
that they know, a third party knows that I have done my job
Okay. Okay.
and that our clients know what they're doing. I can't
Now,
sugarcoat. I can't just tell them, oh, there's no payment. It's so cool. No. You have to see the amortization chart. You have to know that this is a reverse mortgage. Okay, because you're not making any payments. your equity is.
Now, what about if the person is ill and they want to have this? How are they protected? Like, there's so many families where there's dementia in the story. So, can the power of attorney, person with the power of attorney, act on their behalf because it's in their interest to get the reverse mortgage, but they're not have the capacity themselves? How does that work?
Good question. And yes, power of attorneys are scrutinized.
Mm.
They make sure that they are legit and how they came about. But yes, people with powers of attorneys can get these loans for their loved ones.
Well, particularly, I would believe a strong power of attorney could be from a trust that has been established for 5 or 10 years, and they know that this was at a time when they were healthy and full capacity. This was their true desire. And it was
Perfect.
done with all the checks and balances, an attorney drafted or paralegal drafted and signed by witnesses, etc., notarized documents.
And I'm glad you did that whole chain of how a power of attorney should go, because ideally the power of attorney should be when that person is healthy.
Mm-hmm. Yes.
Otherwise, sometimes you have a springing power of attorney where it takes two doctors to say yes, they are incapable of making financial decisions, and then the power of attorney will kick in. So different things.
And that goes in line with being educated. You know, in the past, there was a lot of fear in planning for the end of life because it was like you were signing your death certificate or something. But now we understand financially, we're living longer. We need to be more informed and plan ahead. Like we plan for a wedding, we plan for the vacations and family reunions. We need to plan to have our best life financially post 50, you know. So it's something that understanding the realist, like the trust process, you know, having your insurance, understanding how just being financially literate, right?
And you hit it, more informed. More informed. The more I'm informed, the more my parents are informed, because I'm constantly talking to them about it, even if they don't want to.
Yes.
Keep talking, keep asking questions, just little bits, just little bits.
Yeah, you have to encourage it, and it might take some time to uncover. I remember I encouraged my parents probably for a good 5 years to the value of a estate plan. And
Mm.
I'm so glad they did have that in place. But sometimes people have to warm up to the idea and just a nudge here and there. And you can bring up conversations about other people doing it. So then it's like, oh, it sounds more natural. Did you know the neighbor next door has a trust and this is what happened to them? Or in the news, I heard something was happening and it was so valuable that they had all their plans done. So just kind of sprinkle conversations so it just sounds like a normal thing, nothing that you're pressing them to do. What do you think? Is that a good approach?
I have been using that approach since my kids were little, because my kids didn't want to listen to what I had to say. I said, guess what this mom told me the other day? Or
Yeah.
guess what I heard the other day? And they'd be like, what?
Right.
And I would just tell them whatever I felt like telling them.
Yeah. Well, you know what I did with my daughter when she was young in high school? I would teach her about money and some different principles, but of course, what does mom know? So I took her to sit down with the financial advisor and let the financial advisor run a profile on her and what she could save if she started a plan while she was even in college, a small plan. So it was just, and so she left there with her mind just like, you know, full of ideas of what's possible and seeing how those amortization tables work of what's possible for in the future with the just a small beginning.
And again, being informed is so important. Raise your hand,
Mhm.
ask questions. You are not obligated. You're going to know. Again, if you've reached 62 years old, your gut will tell you if something is wrong.
Yes.
Listen to your gut.
Yeah.
If you've got a shyster on the other line, you're gonna know.
Right, right. And you know, that's another point. Ask 2 or 3 people, get a second opinion.
Mhm.
Get a second opinion. So then you can hear the difference and where there's guidance and where you're being sold something.
Yes, and we encourage bringing in family members to the conversation,
Okay.
because they're going to be dealing with your home regardless of what type of loan it has on it.
Yeah.
Okay, a loan's a loan. So we encourage that. Some of my clients are like, I'm good. And others are like, yes, I would like my son to sit in with me.
Yeah, some families are sharing that information so it's not a startling where to look, or how does this work? I do have a friend that wasn't informed. She lived out of state, so the in-state relative sibling took care of everything. And when they passed, all the information left with them. So it's important for everyone, the village, to be involved in what's going on and have
Oh,
meetings, right?
yes.
Support.
Well, and I get calls from the adult children.
Okay.
So I have two sisters that are each giving $1,000 each to their parents.
Mm-hmm.
Their parents live in a beautiful, beautiful home in Scottsdale, Arizona, worth about $2 million.
Oof.
Still have a loan on it, still
Okay.
have a payment on it, but it's only about $1,400. But $2,000 is coming out of the kids' money to
Right.
help mom and dad, and they're sitting on
A ton of money.
a ton of money. And so the kids reached out to me,
Mm-hmm.
and we're having a powwow with everybody coming up very soon so that we can go over what is needed, what do they think their future needs to look like, and that sort of thing, so that we can alleviate this situation
Mm-hmm. Mm-hmm.
and have everybody happy and not upset every time they're cutting that check for $1,000.
Right. Now, what happens if someone has a reverse mortgage and they've aged another 10 years? So the 7-year-old, now she's 80 and she needs to or wants to move into a assisted living facility. So then is it possible to get more money? Well, first of all, the home, she's not passed, so the house can stay intact. Could more money be removed from the equity to pay for the $15,000 a month? Some of these facilities are super expensive.
Very expensive. So let's go to some basics about the reverse. Number one, it is owner occupied. You must
Oh,
occupy the home that has the loan on it.
okay.
That doesn't mean you can't go on extended vacations. That
Mhm.
doesn't mean you can't have a second home in another state without snow.
Okay. Yeah.
Okay, that does not mean that. It just has to be your primary residence.
Oh, so if you're in a senior living facility, what happens?
Most likely you will sell the home,
Okay.
invest that money so that it is building, and that you're utilizing money each month to pay for your care.
Okay, gotcha. All right. So that only works if you're owner occupied in the house.
Owner occupied. Now you can use the money to go buy anything you want to.
Sure, sure, yeah. But you just need to occupy this house primarily because they want to know that it's being cared for properly, home ownership and all of that.
Yeah, so I'll dive into another story if you don't mind. So, married couple,
Mm-hmm.
wife needed to go into assisted living.
Okay.
And the one that they found that they wanted her to live in was far away from where they currently lived. So
Oh,
they sold that house,
okay.
purchased a home near the care facility under the umbrella of reverse. Did you know you can buy a house under the reverse mortgage?
No, but I like it.
So, husband lived 1 mile from the care facility because he needed to go back and forth every day
Sure.
until
Okay.
it was her time to leave this beautiful earth.
Yeah.
But he had a plan. Didn't know if it was going to be 6 months, 1 year, 2 year, didn't know. Okay. But he's working the plan. He's purchasing the home next to the care facility. Now, here's the example. So, sold the house. You've got some money that you got out of the house. Let's say he got $500,000.
Okay.
And where he needed to live by the care facility was $600,000.
Mm-hmm.
We can't pay cash. We don't want to pull money out of our investments. It's silly. It doesn't make any sense. All right. So under the umbrella of reverse, under the purchase umbrella, for instance, I'm going to give an example. $600,000 purchase price. He
Mhm.
put $400,000 down. Okay.
Yeah.
And if we go back to my story, he had 500,000, right?
Mm-hmm.
Okay. So we're going to buy it for 400 down.
Yes.
Payments, unless you want to make some. You're responsible for taxes, insurance, and his had an HOA because it was a little condo. Okay. And that's what you would be responsible for if you paid cash regardless.
Sure. Yes, true.
All right. The cool part is that extra 100,000 he got to set aside.
Mm.
Number one, we need to pay for care
Yes, that's
at the
right.
care facility.
Mhm.
And his tax advisor or his financial advisor is like, hey, we need to do something, big with this money to help build you up.
Yes.
Because after your wife passes, I still need to have you have money.
Right, exactly.
So, their financial advisor was doing a lot of math, a lot of math. So that could have been distributed a lot of different ways, that 500,000 from the sale of their home. For instance, if the house was 300,000 near the care facility, don't pay cash.
No, no.
Leverage your money.
Put in
Because,
an
again,
annuity or something that pays that.
something, whatever someone that you trust, I don't do investments, whatever someone you trust advises you based upon what I'm advising. So
Sure.
we're all a team.
Yeah, working
We're all having
together.
powwows on Zoom.
Yes. Yeah.
Because it makes sense. And because with all of these really cool tools that I have and the financial advisor has, and then ideas that you want for your emotional and medical well-being, it's all going to come together.
Yeah.
Because you've got a bunch of smart people helping you.
Right, right. You don't have to do it alone.
You don't have to do it alone. And again, there are a lot of things that your circle may not be privy to.
Yes.
Get out of your circle a little bit, explore a little bit.
Yes.
Don't be scared. You don't have to sign anything just by talking on the phone.
Now, do you in your mortgage business do like educational talks about this, like on your website, or how do you let people know this option?
I have no problem. I do educationals for real estate agents because I feel like they need these tools because they talk to a lot of people. And I'm in the mortgage world. That's
Right.
what I
You're on
do.
the
So
front
I have
line. Yeah, the agents are right there on the front lines of the battlefield.
they are, and they need this tool in their toolbox because, it's helpful for everybody. But as far as a client, I love the one-on-one. But I am not opposed to doing a group setting. Like I have this guy, he does computer help, IT help for seniors in his community.
Oh, okay.
So he's always working with seniors. So we're going to do a little powwow with him down at the HOA.
Oh, that's great. I love that.
Yeah. So, I mean, if anybody wants me to speak, I would love to. That's where I get all excited. I get all nerded out. Yeah.
Yeah. No, we got to get the word out. When I was working with 1031 exchange, I gave CE credits. It was approved by the Board of Realtors to give CE credits and inform the agents about the 1031 exchange. And that's so powerful because a lot of times people don't know until they sell their home that they have this huge capital gains tax to pay. And so the agents are really a valuable tool. So when you always ask your agents, in your community, what's possible, what's new for people, someone in my position, they're a good resource. And good agents make it their business to stay informed. So
yes. And again, you will know when you ask a question, you'll know, you'll be nodding your head on the other side going, oh, yeah, cool. You'll know. Again, you don't live on this earth for that long and not have a gut that tells you good and bad.
Right. No wooden nickels, like my parents used to say. Don't take any wooden nickels. So follow your gut. Don't take any wooden nickels. But it's important, I think, what we're getting from this conversation today. Reverse mortgage is a good thing. You want to be informed.
Not for everybody. Doesn't work for everybody.
But it's an option.
Oh, it's a beautiful, beautiful financial tool.
Yeah. And it gives you options to go into buying something for your grandkids, for your children, a second home for yourself, to travel, to update your home. And that's so important. I remember visiting my parents when they were aging, and not visiting all parts of the house because it was like, oh, we don't need to go back there. It's just the two of us. We can sit in the living room instead of in the big den. Well, you know what was happening in the den? The rain was coming in.
Oh,
And so there was water damage. And another time I went to visit them. And that's why I really encourage people to visit their family as often as possible. And I was visiting monthly. And one visit, I heard this noise when I came in and set my bags down. I said, oh my goodness, what is that noise? My dad loved music, so I just knew it was some type of speaker that was just staticky echoing. But no, that wasn't it. It was a pipe had burst
oh,
and there was water going underneath the house. And when I called the plumber, the water was to his kneecap. That's how much water had spread down there with this pipe burst. And my mom had hearing issues, so she didn't hear it. And my dad wasn't paying attention because he doesn't do the laundry. So it was a disaster. So we need to stay together with our families and keep an eye on them to keep them safe and independent as long as possible. And I really believe that this is a wealth building tool because preserving the home with repairs with the reverse mortgage is essential because as they age, the house is aging too. And then later when you go to sell it, it will lose some value because it just basic repairs that needed to be done to maintain the home and the integrity of it and the, what do you call it? Just the modernness of it because there's something called obsolete.
mm.
Property can become obsolete. And so it's important to make sure that your home is kind of keeping pace with the community too.
Yes. And again, your medical needs. Do we need the really cool bathtub?
Oh, that's
Do
right. The
we
walk-in tub. Yeah, my mom got one of
just
those.
don't open it?
The walk-in tub is invaluable.
And they're pricey.
They certainly are. So
Yes.
sometimes the reverse mortgage could give you some comforts that you make to modify your home and make it work for you now and where you are with mobility. You might want a stair lift that takes you up the stairs, more comfortably, that type of thing.
Yes. You may want, maybe your kids don't live close to you. Maybe you do want someone to come in and maybe do some light housekeeping 2, 3 times a week and check on what's going on, or change your air filters, or, the things that need to be done on your home. Again, health and safety,
Right.
health and safety.
Yes. And quality air is important for your overall health. So something as simple as filters, the water filter in the refrigerator and the filter in the air system, all of those things are really important. So like I said, I really believe this is endless possibilities for comfort now and also in planning for, future, maintaining the property values and things like that for generational wealth as part of your plan overall. So this is great, great information. And in the notes below this video, we're going to have the ways that you can contact Tiffany and talk to her, because one-on-one, get some education and information on how this could work just for you or your loved one.
Yes. And again, a lot of my clients, even if it doesn't work for them, I tell them, take this information and put it in your file cabinet. Because you're going to be talking to someone, maybe at church, maybe at Bunko, maybe at your dentist office, that maybe just lost somebody.
Yeah.
That was bringing income into your household.
Right.
That is going to need help.
Now, I know a neighbor years ago, this is maybe not related to the reverse mortgage, but at the time, I don't think they qualified for the reverse mortgage. So they refinanced their home, and there was a husband and wife, and they were offered the opportunity to do some type of mortgage insurance, and so that if something happened and someone died, it would pay off the mortgage. And they didn't elect to do that. Do you know about those where if you get a mortgage, they'll say, do some type of insurance on there?
So there is mortgage insurance, but it doesn't insure you. It insures the investor against you defaulting on the property. What you're talking about is more like a private insurance that you would go get.
Oh, outside.
Yes, outside. It is not it is not something that I would sell.
Okay.
Because that is something
That's an insurance
like
product.
life insurance.
Okay, gotcha. Okay. Yeah, I just wanted to be sure about that. But if that's a situation, that's something to talk to your financial advisor about as well.
Yes. And again, sit down with someone like me, with Cynthia, someone that could just make you a nice plan. When I talk about reverse mortgages and I talk about your personal scenario, my time is free.
Yeah.
So all we're doing is educating and educating based upon your scenario, not the billions of people on Google.
Right.
Okay, please don't Google for this sort of thing.
Right.
It is
Like a
very,
fingerprint. It's very specific.
it's very specific, only to you. And once I know a little bit about your scenario, we just start honing in on what your options would be and what maybe would make you happy and allow for a better life, build some wealth, whatever it is that you have that you want to do.
Yeah, just help you with your particular financial goals and your lifestyle. So I want to thank you again, Tiffany, for sharing this invaluable information. I think it impacts so many people at every level and every age. And so we need to be knowledgeable to help our families and our extended families and friends in our network to do better, live better. And so thanks so much for joining us today. It means the world.
My pleasure. Thanks for having me on, Cynthia.
Thank you for tuning in to Crown and Keys, where wealth meets wisdom and legacy is built with intention. If today's episode inspired you, don't keep it to yourself. Share it, subscribe, and leave a review. And if you're ready to take your wealth strategy to the next level, visit crownandkeyspodcast.com to align your finances with your future. Until next time, stay aligned, stay empowered, and keep building your legacy. Your keys are in your hand. See you soon.